Okay, so to go over the answer to this Power Strategy 1 question, let's look at the chart that's in question. So this is a chart, and obviously we're looking for the trade first. How are we going to identify the trade here? We're looking for an AB equals CD formation. So pause the video and see if you can find it. Did you find it? That's the AB equals CD formation there. Now there are a few ABCDs that you can probably find elsewhere as well, but this is the one that we're going to focus on. Hopefully you identified this one as well. Now by now we know that we're looking at a long trade here. We're looking to capitalize on the C to D move. And because the A to B move was up, when B to C retraces back down, we've got an up move from C to D that we're going to capitalize on. Now as with all the other examples, we want to enter on the 25% point. Now 25% point of what? Of the A to B move from point C. So we're going to wait for price to go up 25% of the move from A to B. So let's say this was 100 points here, for example. Let's just make it easy for us. Then we want it to move up 25 points, which is 25% of the 100 points. 25 points up from point C, and that's where we would enter. Now in this case, we will be entering at this point here, as indicated, which is 25% of the A to B move. Now what about where we're going to place our stop? As with all strategy 1 trades, we want to be placing our stop below point C. So you put it a few pips below the actual point C, and the point C is identified as the lowest point that price actually hit in this area. And now what about where we want to move our stop to break even? So we're in the trade already now. We've put our stop here on the red line. As you can see, price doesn't go lower than the red line. Where are we going to move our stop to break even? So pause the video to work it out. So did you get it? Now when we look at strategy 1 trades, we want to move our stop to break even at the 50% mark. The 50% move from point C. And 50% of what? 50% of the A to B move. So from point C, 25% was entry. Another 25%, which will be the 50% mark, will be where we want to move our stop to break even. And that is the point right here. So at this point, we are going to move our stop to break even. So this point right here did not reach that red line. Price went down a bit. Then price went up and it reached that break-even price. So at this point right here, we would move our stop from here up to the entry point. So what we're saying is we're trying to preserve our capital here, and if price comes back down from this point, down below the entry price, that means we would have entered at that entry price and we would have exited at the entry price, meaning we will not lose anything. We will exit at break-even. So where would we exit here? Where do we exit on strategy 1 trades? Pause the video and work it out. Now with exiting on strategy 1 trades, we normally exit at the D point. But this is a bit of a trick question because in this case, we do not exit at point D. Where do we exit? We exit at our entry price. Why? Because we moved our stop to break even, and so when price hit this point here, we moved our stop up to the entry price, and then as you can see, price came down, and at this point right here, when it broke through that line, we would exit the market at the same price that we entered, meaning we came at our break even, and even though price did go back up to the D point where we would have profited, it doesn't matter. In this case, we had to put in that contingency, we had to preserve our capital, and if price went back down, we just wanted to be out. It doesn't matter that price actually went back up into profit. The point here is we didn't lose anything. And so we don't need to profit from every single trade. But what we want to do is preserve our capital as much as possible. In this case, we did that. We made sure we didn't lose any money. Price at this point could have easily carried on going down, in which case we would have lost had we not reached our break-even price first. We would have actually lost some money. But in this case, we broke even, and although price went back up, price could have easily come back down, in which case you still saved your capital. So that's the name of the game here. We know we're going to make money most of the time from these trades. So when we break even in some of the trades, it doesn't matter. We're also going to lose money in some trades, and that's fine because we're going to make more money on our winners than we lose on our losers. And overall, we are going to be up. And that's all that matters. All you need to do is follow the strategy out to the T and you will make money. So what about our risk reward here? It's obviously 0 because we exited at break even. So I hope you got that right. That was a bit of a trick question there, but I hope that you did identify that we do come out at our entry price because we moved our stop to break even, which was the entry price. If you didn't get that right or you didn't understand it, then you may want to go over the previous module again and make sure that you understand exactly what was covered here. If you did, then please continue over to the next page and we'll go through another example.